Hello traders and welcome to another video review. Today is Monday 20th of December 2021. Let's take a look at the Forex calendar, but please do not expect too much from today. During the London session, we got only some minor data scheduled for release, like a current account of the Eurozone, which is shrinking to $18 billion, and it's worse than expected, $20 billion. CBI industrial order books balance from UK scheduled for release at noon, and then Bundesbank monthly report scheduled for release at 12 at noon as well. During the New York session, we got the leading index from the US and the Westpac Consumer Confidence Index for the fourth quarter from the New Zealand. The last one is scheduled for release at 9 p.m. So that's about everything from the economic calendar. Let's take a look at the majors. The first one we are going to take a look at is US dollar to Japanese yen. As you can see, we got the top for the wave B made at the level of 114.29, and right now we got the bearish engulfing here, which is another confirmation of the for the wave B top. And now we are going lower. Why? Because there is wave C to the downside that's supposed to be done for the sequence of A, B, C corrective cycle. The target for the wave C is at the level of 112.25, 112.09 and 111.71. Those are the targets for the wave C. Despite the fact that the top for the wave B is done, we are still hovering around the level of 50 on the RSI, which is the, of course, neutral level. Right now we just broke below this level, but we can bounce easily, and that would mean the wave B would be eventually more complex in price and time than the average wave B. Let's take a look at the euro dollar. The euro dollar is still trading close to the level of 1.1237. This is the local technical support for market, and as you can see, we've been trapped in that tight zone between 1.1373 1.1237 for about 2 weeks, and now those levels are very close to the lower trend line. Let me just extend this line here so we can see it. There you go. And of course, any violation of this line would mean that we are going to test the level of 111.67, 111.53. This is the key long-term technical support for the euro dollar in the nearest time. However, any kind of strength shown on the charts, like any kind of attempt to break above 1.1373 towards 1.1422, whereas the first technical resistance is very much welcome, because the market conditions are, of course, on the daily time frame chart like this one, are extremely oversold. The key short-term technical resistance to mid-term technical resistance, and the real game changer on the euro dollar is the level of 1.1501. As you can see, I have marked this level with my blue arrow, of course. So please keep an eye on the euro dollar for a possible breakout. Let's take a look, of course, on cable. Cable reversed from the level of 1.3353, which is the local technical resistance. We got this kind of a long shadow on the 16th of the December. Then we got the bearish engulfing pattern. As you can see, this red candle completely covers the body of the previous one, and today we are approaching the level of 1.3195, and then we got still 1.3160 and 1.3129. So this is the demand zone. This demand zone is close to the lower channel line, around the level 3070. So please keep an eye for any down move continuation. In that situation that we have here, 1.3353 and 1.3412 are just the short-term technical resistances, but the real game changer is 1.3515. Only if we break above this level, we can say that the sentiment is changing. As you can see, we just jumped on the RSI towards the level of 50, but right now we are back towards the level of 38 points, which is still a negative reading, and the market is under control of bears, so lower price targets are still projected. Let's take a look at the crude oil then. What is going on? Very interesting development here. The level of 73.50, which is just below 50% of the Fibonacci retracement at 73.97, has been too strong for bulls. And after this bounce from 62.43, we got 2 days of a very nice bearish development. So the question is whether this trend line, and of course the level of 62.34, will hold the bearish pressure, and there will be another bounce. Because if not, then of course what we see here is a typical trend line breakout, and then that's not a good sign for bulls at all. We might be making kind of a bigger, deeper, more time consuming corrective decline towards 57.09 or even $50 per barrel. But first we need to definitely break below golden trend line, lows of this candle 62.43, and then below the 61.59 technical support marked with my blue arrow. So please keep an eye on the crude oil as well. Very interesting movement just before the Christmas and at the beginning of the new trading week. And last but not least, let's take a look at Bitcoin. How is Bitcoin doing? Bitcoin is not doing well. Bitcoin is not doing well. The bulls don't have too much power here anymore, and as you can see, we are still trading below this golden trend line, below the blue trend line. We are now even below the $50,000, which is again some kind of a nice psychological level. The market is under the influence of bears. We are still hovering around the level of 34, 30, which are the typical conditions for the market that is going lower and maybe trending lower in the short term, of course. So our top for the wave 5 at the all-time high at 68,959 was placed perfectly. Right now we are waiting for market to hit the zone of 39,540, 41,188. This is the key short-term demand zone for Bitcoin. Any violation of the zone is very bad for Bitcoin and might extend the down move, the down cycle toward $30,000. So that's my outlook for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.